We are definitely in a bubble, but a bubble itself doesn't necessarily mean that number one is going to burst soon, or two is necessarily a bad thing, so to speak, right?
Today, we jump into the world of hedge funds and we talk with one investor about how they evaluate AI opportunities, leverage AI in their research and investment management process, and share broad lessons about what can be drawn from the current wave of AI innovations. Shu Bai, welcome to the pod.
Thank you for having me, Ian.
Excellent. Shu, why don't we start off with you introducing yourself and telling us a bit about yourself?
I started my career in investment banking. I was an M&A analyst at Blackstone at their then M&A advisory division. Then I had a couple of years of experience in private equity before I decided to pick the school bags again and went to business school. I would say my public market investing journey really started after business school, after I moved to New York City. I started at Barron Capital. This is a firm founded by Ron Barron. He's known for his long-term growth-oriented investment styles. I think at Barron is really where I established my ethos as an investor. I think what really resonated with me during those 5 years was focusing on the long term, bet on good people and unique business models that are very defensible over a long period of time. So, the rise of fame, obviously Ron made many great investments, but the rise of fame is really Tesla, right? Seeing him sticking with Elon Musk through the thicks and thins, even during the worst times, was really a lesson for me to really focus on the entrepreneur and also just kind of what he or she is building over the long term and don't get lost in the short-sightedness. So after 5 years at Barron, I moved to Davidson Kempner. This is a New York-based hedge fund. I led their Asia technology investing practice. And after that, I moved to Balyasny. This is also a large hedge fund multi-manager platform where I am in charge of investing in a much broader industries on a global basis that focus on semiconductors, hardware, software, internet, and I try to have a holistic view on everything I do on both and the long and the shorts of my on my investments. So it's been a super fun journey so far.
Brilliant. Thanks for that. And in that technology space, that's obviously been impacted a lot by AI. So what would you say has been the biggest change in that investment world from the last couple of years?
Yeah, it's a sea change right now. And I think we are seeing in the market right now is the market is undergoing a massive repricing exercise. And it's really fascinating to see what's happening. Obviously, with the advent of the large language models 3 years ago, a lot of things are being impacted, right? We see the SaaS companies multiple trading multiples being contracted. We're seeing the hardware companies, namely the chips and the memory players, have accrued a lot of value on the stock market over the past 3 years. And this is actually quite normal. Think of this as a gold rush where the first few years is really your buyer picks and shovels to mine the gold. But reality, the eventual value would accrue to applications, what AI could deliver for businesses and individuals and, to deliver that sustainable long-term ROIC. I would say in general, the AI itself is not really new in the sense that we have to come up with a new framework to think about how we think about investing. But what it does do, at least for now, is really make us to do, just, think much harder about, if we like a business, what exactly is that long-term sustainable cash flow or return going to look like? And another really interesting that's happening right now is, because the two largest AI disruptors, OpenAI and Anthropic, are actually not public. So there's a lot of reluctance for the market to really, underwrite what's available in the market, right? Be it the Max 7 or other, large software companies. Market is being quite reluctant and kind of assigning a longer term terminal value for these businesses. And a big part of my job is really to figure out, how do we exactly underwrite these businesses in a 3 to 5 year horizon.
And that's a very good point. You came up with a long-term investment basis or a bias in your investment approach. And the speed at which AI moves, A, makes it difficult to forecast out, but B, some of those stable cash generating SaaS companies, technology companies, what was stable cash flow has suddenly been impacted very quickly. So, how do you balance your long term approach with the short term and fast impact that AI has on existing companies, but also new companies and new opportunities that come through?
Yeah, it's really a matter of, what exactly is the moat of a business, which is really, again, $1 billion question right now. Maybe we'll use some live examples, right? So if you look at the Max 7 right now, let's just talk about Microsoft and Google as two prime examples, right? These are the darlings of the tech industry over the past 10 years. These businesses have gone through amazing transformations. I would say piggybacking on structural trends, right? So going from, smartphone to cloud computing and now to AI. And they all have AI angles, right? There's this misconception that like, company A is AI, company B is not AI. And the reality is like all companies are AI or in some forms AI companies. They're all incorporating some sort of AI in their respective businesses. So Microsoft, obviously, I would think of it as two pieces, right? The business has it's Microsoft Office, right? Office 365, which we all use. It also has Azure, which is their cloud based business. If you think about Microsoft in the lens of these two businesses, the Office is obviously pretty straightforward, right? It's adding more seats, is charging more dollars per seat, and that business grows over time. The Azure business, has been an amazing business over the past, many years. It's basically catching up to the leader AWS very rapidly, and it also has a very unique relationship with OpenAI. But what if you think about it philosophically, what's happening is, Microsoft has a cloud business which provides infrastructure for the rising AI companies, right? OpenAI being the largest example, but also to many AI startups, right? So it's buying the GPUs from NVIDIA and it's building the data centers and is renting these GPUs to OpenAI and to other AI startups. But the issue is really that they're renting the GPUs or they're giving these access to of compute to the future leaders, arguably the future leaders of AI that could actually very much disrupt their core business in software, right? So this is one thing that I really need to think about both in the short term and the long term. In the short term, the cloud business might be growing very rapidly because everyone's using AI. Why is it growing fast, right? It's because maybe Claude is using Azure as a service. Maybe OpenClaw is also using that to actually it could actually replace or disrupt the core business of Microsoft. Now let's switch gears to Google, right? To Alphabet. Alphabet is a little bit of a different story. It also has two parts of the business, right? It has its Google search, right, including YouTube, advertising based, right? It generates dollars by selling advertising in various forms. And it also has a Google Cloud and also Google TPU, which is a very proprietary and high-end compute ASICs chip that in many ways could rival the NVIDIA GPUs. The business model here is a little bit different in the sense that Google has its core business in advertising, but it's actually the core business in advertising is actually being supported by the Google Cloud business with the TPUs. And as far as we can see right now, the OpenAI's and the Anthropics of the world are not necessarily directly challenging the advertising model that Google currently has. Not yet. Obviously, advertising will be a future revenue stream, but the thesis on Google is very different from Microsoft. And the debate here is, can Google successfully better or enhance their core business using their cloud and their AI compute on the other, as their second part of the business to successfully defend their moat, their existing moat. So, these two examples I would say would illustrate what's happening in the market today. I mean, just as how people would think about, or how I would think about long term versus short term, considering all the moving pieces in the newcomers versus the incumbents.
Maybe pulling those two responses together, you spoke about eventually most of the value will be at the application layer. As we think about the AI lifecycle, you've got chips, you've got hardware, so data centers, you've got obviously models, but then applications, and then the end consumer. NVIDIA, from a chip level, unlocked a lot of value over the last couple of years. Share prices exploded. We've seen cloud pre-AI, but also post-AI continue to grow, capture a lot of value there for the big three. Does this mean that as you look at this from an investment theme perspective, you look at it in different lenses? So short term, maybe NVIDIA a few years ago, cloud probably still an okay theme, but you shift over time, then, okay, what's going to be the consumer impact, or sorry, the application impact, and who's going to win with consumer, who's going to win with business to business, enterprise? Do you need to look at that from different lenses and invest accordingly, or shift as the paradigm changes throughout time? Or how do you approach that?
Yeah, that is, again, a very, very shrewd observation to say the least. It's no doubt that NVIDIA's market value has exploded over, I would say, ever since ChatGPT came out in late 2022. But if you notice, in the past 6 to 8 months, it didn't really go anywhere, right? In fact, it's probably gone down a little bit. If you look at it from a for multiple point of view, NVIDIA is trading at probably the lowest valuation in a decade or so. It's I would say if you look at the street consensus for 2027, it's trading at something like 15 times, right? That is really not about next year, right? Because it's really a way for the market to to say that, look, we just don't believe that this revenue is sustainable, right? It's not that the market is only willing to pay 15 times for NVIDIA's next year revenue. It's really a way of saying we're not confident that the future cash flows for the next 5 to 10 years will be nearly as high as what it has achieved in the next, in the past 2 to 3 years. So in many ways, the market is already telling you that, look, NVIDIA was the winner for the past 3 years, but it's not the winner for the next 3 to 5 years, right? So where is the winner, right? That is the, everyone is trying to figure out. If you look across the tech spectrum, when I kind of divide up the tech world in sort of investment universe, right? I mentioned earlier there's semiconductors, and there's a lot of things in there. There's chips, there's equipments, memories, smartphone PCs on the edge. That's one sort of bucket. And then you have enterprise SaaS companies, and you have consumer internet services like Meta, Google, etc. The short answer is there's no obvious signs of any of these companies would be long-term winners, which is the fascinating thing right now. I mentioned earlier that two of the highest disruptors and in AI are not public, so they're not investable by the general public right now. But we see what the valuations they're being achieved over the past 2 years, and granted, so right, like Anthropic now is run rating close to $25 billion based on the latest chatters. And, just a few months ago, it was 16 billion. As of last year, for the full calendar year of 2025, it's only like 9 billion. So where is all the revenue going in this world, right? When your IT spend is actually growing single digit, it's all going to OpenAI and Anthropic. So where is the winner? You could say that right now the market thinks that these are the winners, but we also don't know, right? I mean, there's obviously the cost component to it, right? In exchange for these, massive revenue growth, there's a lot of investments that are being plowed into, chips, infrastructures, and et cetera. So right now, I would say no one has a clear crystal ball and who the winner is, at least in the public domain right now in the world of AI. Personally, I think things are never that extreme, right? The SaaS companies are not going to be dead, but they're also not going to be commanding the same level of multiple that they have been in the past decade or so. A lot of it also comes down to just the ability for companies to charge, right? The pricing power of these businesses is very different today than a few years ago when you and I could very much just go on to Claude and make a website and build a simple app, right? So the barrier of entry for software is much lower now than it's ever been. There will have more softwares. It's just that we're going to have a different groups, a total different cohort of software companies that are completely new, that are operated or monetized in a very different way than prior generations. I personally, in the near term, still very much believe in compute because we just need a lot more compute and power to build these AI systems. But in the long run, I think a lot of these businesses will continue to evolve, especially towards specific domain expertise, right? In finance, in law, in coding. So there will be a lot of vertical winners that might not be a chat GPT per se, but they'll be an expert in that particular area. So I think the jury is still out on the application front, but in the near term, I'm still pretty positive on just sort of the AI infrastructure layer of the stack.
If you're enjoying the Fund AI pod, the best way to support the show is simple: hit subscribe. It really helps a new channel like this grow, and it allows us to attract even more interesting guests from across the funds industry. Head to www.thefundaipod.com to catch past episodes, nominate future guests, or explore ways that we can work together, whether that's consulting, sponsorship, speaking, or collaboration. Now back to the episode. One of the items there that you mentioned was the cost of compute tokens, etc. Now, America has some of the leading frontier models, LLMs, but they also have a higher cost when you compare that to China. So China has maybe not quite as powerful models, but they're not far behind, but there's a significant delta in terms of cost. So as you look across markets in both China and the US, what observations, what impact does that have when you look at investing in companies across those two markets?
That's another fascinating development or phenomenon that we're seeing right now. In fact, I mean, first of all, that's exactly right. A number of the LLMs, so to speak, in China are actually public right now. MiniMac is one of them, listed in Hong Kong. And if you talk to them, they'll tell you, look, we're able to achieve similar level of outcome compared to the bleeding edge of LLMs in the US with a fraction of the cost. And that is quite easily understandable, right? Because talent in China is much cheaper, right? You don't see these, $100 million poachings from one firm to another. It just doesn't exist in China, right? So also, China, given its, high emphasis on engineering, on just general tech, you have a lot of like abundance of top tier engineers at lower costs. I think the market, I would say, market in the US is definitely aware of that and is worried about that. But I think there is a layer of geopolitical element to it that serves as kind of a blockade for Chinese companies to fully, for example, enter the U.S. market and completely disrupt, let's just say, the checks and balance of what's happening here with the leading LLMs and their ability to monetize and eventually reach profitability. A very good analogy is actually the electric car industry, right? So we always joke that if BYD were to be, imported freely into the US, Tesla definitely will have some issues. I would say it's a similar situation with these large language models. Many, many of these LLMs in China, DeepSeek, Minimax, they're not freely, disseminated in the US just for this particular reason. So, yes, we are aware that there are these people doing amazing things at a fraction of the cost, but it also, for now, doesn't really bother us in terms of, looking at the US market that, oh, this really, changes the way that OpenAI or Anthropic will be able to monetize. But, it doesn't quite matter, or it doesn't necessarily for the Chinese players to necessarily come and disrupt the leading edge models here in the US. We have a lot of open source models that are also at pretty cheap, cost based cost levels compared to the leading edge models of OpenAI and Anthropic. And I would say it's still an ongoing debate as to is this level of spending sustainable by itself, right? Even not considering the alternate models outside of the US. I think that's another reason why some of these AI, hardwares, chips, and kind of like the picks and shovel trace, so to speak, is sort of hitting a wall in the short term because the market is telling me that it's not sustainable.
And when you're looking at technology companies and you're evaluating their sustainable advantage, you spoke about moat, what features or what pieces of the company do you look at to determine if it'll be disrupted by AI or it has an impact on valuations, terminal value, etc.? What is it that goes into the assessment of a company, and what are those AI things that you're weighing against it?
Yeah. The easiest lemons test would be if I were to go to ChatGPT or Claude to do what your company does, right? What outcome, what result would I be able to get, right? If you're a website building company, what exactly is your value add versus if I were to just go to Claude Code and make a website, right? So there's a lot of that going on. But I think ultimately it comes down to, three things. If we're to put a framework around it, one is just like, where are you in the stack, right? Are you the infrastructure layer? Are you the SaaS layer? Are you the model layer? Are you the hardware? Are you the software, right? And you assess sort of a Porter's five forces framework around it, right? Who's the competition? What's your pricing power? Who are the new guys entering the market? What are the substitutes? The other two is just, it would be, one is what exactly is unique about the business model, right? So when I think about LLMs or AI in general, I think about the model itself, which is kind of the algo, the logic behind it. But there's also workflow and data, right? How do you do a certain things and what data you use to do that certain thing? So I think there's definitely opportunities for, be a SaaS or other types of newer services where that vertical, domain expertise I mentioned earlier would provide a level of defensible moat against kind of the large language models, the behemoth of industry. And if you were to, ask Anthropic, oh, because everyone is sort of watching OpenAI, Anthropic on what their next move might be. Oh, what if they wanted, have a tax planning software now or service now? What if they could do finance for you, for example? Everyone is scared of what this next move might be, but in reality is I don't believe that these LLMs will be able to do like everything under the earth in order to in terms of vertical specialization. There will be a lot of specialty softwares and services that will be best in class in their particular categories. And I think there's also an element of what buy versus build, right? If your organization, if you want to achieve a certain goal or complete a certain workflow, do you want to use ChatGPT or Anthropic for everything, or do you want to build it in-house, or you want to use existing vendor? There is a level of that, brand, customer stickiness, customer service element to it that I think would be serving as a point of differentiation. What exactly can these LLMs become in the long run? When we talk about AGI, right? Like artificial general intelligence, when these models are as smart as humans, you could pretty much just type in anything in ChatGPT. Help me to build an online school and enroll 5,000 students for me, right? And this was seamlessly basically execute this command and built this online school miraculously for you. Then what in that case, then the most important question is actually who is accountable for this particular outcome, right? Because if I think about my job as a portfolio manager, I think eventually, yes, AI could replace or basically replace a lot of the decision making. Right now, it complements my research process. It doesn't replace my decision making, but there's nothing inherently stops these AI systems to exactly know my workflow and my data, right? And know my logic and do exactly what I do. But ultimately, if you think about LPs that invest in their capital in a hedge fund, they're not investing in the AI agents, they're investing in humans that are accountable, have a fiduciary duty over what they could provide, right? So ultimately, this becomes a question of how do we wrap around, yes, AI could do the work and it could disrupt a lot of industries, but we're humans and we deal with other humans in our societies. So how do we use AI responsibly and have a guardrail to ensure kind of accountability when we go down this path of integrating AI in all of our daily endeavors. And I think ultimately the business models that will come out of this AI race needs to incorporate these factors to form a overall defensive moat to continue to serve or do what they do.
So it's interesting you mentioned potentially being replaced by AI because a lot of the current investment papers around AI in the portfolio management is saying it would augment PMs rather than replace them. It gives you extra information, shortens the time to get the insights out of the data, etc. So just tapping into that a little bit more, how do you use AI in your investment management and research process?
Yeah, absolutely. If you think about what is the journey of a public market investor or any investor, right? It's you gather some facts, you come up with a theme, right? A theme is something that is a hypothesis, which you believe would have the highest value creating potential over a period of time, typically 3 to 5 years. For me, it would be a stock or a theme or a group of stocks that could, double in 3 years or triple in 5 years, right? Which would result in a 20 percent or so IRR on an annualized basis. You do the research, you build a model, and then you stress test the model, and then you rinse and repeat, and that's your kind of daily and monthly and quarterly and yearly cadence in terms of doing research. Right now, I would say AI is extremely helpful in the fact gathering slash modeling part, right? It used to take me hours to go through, filings, right? To look for this data point, in some industry conference or look for these, alternative data sets, be it expert transcript, expert network transcripts or YouTube channels of someone, talking about something very interesting, something on Reddit that could capture some sort of a mini, trend of, what's happening in the retail market, for example, or even just podcasts, right? There was a lot of really interesting, every time, Sam Altman goes on an OpenAI podcast or a podcast about OpenAI, that's interesting because he's telling you something that's sort of like, not, it's only in his head or not been shared publicly. A lot of that needs a lot of manpower and time to gather and to kind of like organize the data and present it as in the most logical way that will eventually translate into a financial model, which would then underwrite a target price for a company in a 1, 3, 5 year basis. AI could do a lot of these work in literally a fraction of the time, and then it's pretty good at it. And you could literally plug in your AI to an expert network, get all their transcripts in the database. You type in, okay, what exactly is the latest demand for memory chips on inferencing? What exactly is the unit cost of token for leading edge models, and how is it trending over time, right? This would literally take us hours to do, but right now you could just query it very very quickly. And then you can also just set up these mini agents that could always monitor what's happening in social media to tell you like what are the pulses of the market, and what are some of the areas that are interesting that you should be paying attention to relating to your investment thesis and your investment universe. So there's a lot of things that are happening. You're right that it has not replaced the decision-making part of it, and is absolutely true, and is related to what I said earlier regarding accountability, and we are humans investing money for other humans, right? And we're accountable for it, and there's a duty around it. But I really believe that nothing stops AI from actually going a step further. If we're talking about AGI, there's really no reason why it won't be able to think like a human when it comes to even complicated investing processes. So, but for now, it's really helpful just in terms of doing that daily research for me as part of my process.
So we talked about what technology companies can defend from AI. If you were to flip that round, there's some companies that can't defend. And given that you work at hedge funds, and one of the advantages of hedge funds relative to traditional asset managers is you can go both long and short. So do you short these companies that you do the research on and find they don't have a defense? And then if so, could you give us a flavor of what categories of companies are most at risk due to AI?
Absolutely. It's a lot easier to long a company than to short one. My old boss always jokes that, shorting is great, but when you really should be having a great day, you're not because of the short positions. But having said that, because of this like tectonic shift, what we're experiencing in AI, there's definitely a lot of disruptions that are occurring in sort of incumbents, right? So I think some of the areas I mentioned is one of the lemons tests is if you look at existing business, can this business be easily replicated by the functions offered by LLMs, right? So that's a pretty simple test, right? If you look at some of the market performance for some of these IT knowledge-based companies, right, be it FactSet or Gartner, or even some of the IT services companies like Infosys or Accenture, it's pretty obvious why the performance of these companies have suffered. One is just that you don't need to pay $150,000-$200,000 for a research report by Gartner when you could actually just ask the LLMs to go through all the data sources available and come up with a report for you, right? I think that's very straightforward as a sort of bet against bucket in in the rising use cases of LLMs. But I actually think many of these businesses are not necessarily going extinct. It's just that their ability to price or charge what they used to charge is going to be different. I mean, there are a lot of businesses, like just think about, let's talk about management consulting as an example, right? if I'm McKinsey or Bain or BCG, I have these consultants. I go to these businesses and help them with, digital transformation, or have some sort of a project on market research. Those workflows or those demands would still be there. It's just that the ability for them to charge what they used to charge will be very different. So I think it is there are many opportunities for what we call structural shorts in the hedge fund industry that will remain very relevant. What the market is underwriting right now is not the complete kind of uh, uh, disappearance of these businesses, but really just about what exactly is their long term margin, their pricing power, and their return on capital is going to be. And we most likely still have ways to go. So I would say those are some of the examples that I would give in this context.
AI has been the topic of the industry for the last couple of years. There's talk about the IPOs of OpenAI and Anthropic. They are some eye-watering valuations, but it's been justified that these are game-changing technologies that'll transform every industry. Do you believe the hype lives up to the reality, or will there be, like every technology boom, a build, a boom, a bust, and then, a rebuild, and it gets back to there is an impact, but it's been overhyped so far? Is the hype real? I guess is the question.
We are definitely in a bubble, but a bubble itself doesn't necessarily mean that number one is going to burst soon, or two is necessarily a bad thing, so to speak, right? If you think about, as humans, we're pattern seeking animals. We're always looking at prior cycles or prior bubbles. In the most recent was the internet bubble. Clearly, it was a bubble that burst and disrupted a lot of value. But if you fast forward the time machine, that we have amazing businesses today as a result of that bubble, right? We laid out the infrastructure for internet. We all the great businesses in internet companies that came as a result. I would say like the pulse of AI today follows a very similar pattern. I mean, there are a lot of differences, but essentially the we're building a lot of GPUs. We are building a lot of data centers. The rural lands in America being snatched up by the minute by large data centers. I mean, there's concerns around just the environmental impact of that alone. But there's definitely an unprecedented and unsatiable demand for compute and for land and for power. We are in the bubble in the sense that we are there's this rush for investing a lot for the future demand for compute that we might not need today, as we speak. But the difference between, say, the internet bubble and what we have today is that all the GPUs that are running today are not idle, right? In the internet days, you have like maybe idle cables laying around. Maybe you bought the routers that you don't necessarily need because the speed is not fast enough for you to need them. The network is not even established yet. But right now is very different because we're all searching on our LLMs. We're all kind of running our AI agents. We're all doing all these things, generating videos and images on our AI. And that the latency is there. That sometimes you get timed out, right? That's because all these queries and token requires a lot of power. So in a way, this bubble is quite different because it's a bubble that is actually, highly the utilization rate of all the investment is actually very high, and given the sort of trend of the demand for AI token, and it's actually it's probably not it's not flashing warning signs as we speak, but again, you go back to OpenAI's revenue projection. They're going to make call it 300 billion in revenue projected by 2023. But in order to reach that, you have to spend like 300 you have to spend like 600 billion or so of compute. So the 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 profitability timeline is still very elusive. So I think the market is still very much, the jury is still out on that, whether or not this is going to be this investment will be recouped. But I still think, as of now, based on everything we see, the revenue or the profit would eventually happen. It probably just happened at a later date. And in order to justify the valuation for these companies, we just need to take a very long-term view that, by 2020, 2020, 2035, or even a longer horizon, we're going to see massive improvements in margins, in return on capital for these businesses as they continue to deliver value. It's hard to say that it's a bubble that'll burst in the near term, but we'll just have to continue to monitor.
Yeah, and I agree that we're probably early in this innings. You made a good point that I've heard before, that during the .com there was dark fiber, so fiber optic cables not utilized, whereas there's no dark compute, there's no dark tokens. Every GPU is needed, every token is required. And in fact, as inference costs go down, as compute power goes up, there's a term and I forget what it is, but as something becomes cheaper, more of it's wanted. And so, the demand continues to grow. You see that in coding, you see that in everything. So are some valuations in the market, especially the private companies, overvalued? Absolutely. But are we still early in this innings? I believe so.
Let's hope so. Yeah.
Will you be investing in OpenAI and Anthropic when they come public?
I think I would. We'll see what first of all, we need to see their specific filings and their financials. There's a lot of numbers thrown out there, but we want to analyze, obviously, the financial readiness and the forward-looking projections and et cetera. I think these are revolutionary companies of our generation. It's really difficult to not give a very, very hard look at them. But will they be the only winners? I don't think that. I don't think so. There will be a lot of, you know, vertical or specialty winners in their specific domains that will be equally as interesting. I think another interesting thing or kind of debate right now is what would be the appetite for the Max 7 or the tech leaders today on the public market once OpenAI, Anthropic, and SpaceX go public later this year. I think it'll be a very interesting dynamic on the public market as to how the investors would allocate capital across these trillion-dollar juggernauts.
Yeah, there's only so much capital that they can deploy, so there's a opportunity cost. They've got to pick the allocation, right?
Yeah.
Just looking at your investment and research management process, you went through a few areas where you leverage AI. Could you give us an example where it's probably had the most impact or you found it the most useful in supporting your process?
Absolutely. One of the things I really like to do is to try to have AI to contradict my thesis. So instead of asking AI to tell me what to do, I wanted to basically stress test a thesis that I have developed, right? For example, OpenAI is leading to fewer Google search, right? As a example. And I want the AI to constantly look for data points that will either support or contradict that particular thesis point. I find that to be very helpful in just like making sure that I'm always on the top of the latest information and helps me to kind of watch out for my blind spots in terms of developing a thesis. Because it's always evolving, and AI is extremely helpful in helping me with that.
So effectively a challenger agent,
Yes.
and, like you said, stress test your thesis. Very good. Okay, Shu, what would be one book or podcast that you'd recommend for the audience that touches on either technology or investing that you find very useful?
Book would be Fooled by Randomness by Nassim Taleb. I really enjoyed that book. Actually read that book for a class in business school, and it's just like a fascinating read about like human biases, and that's been really helpful in helping me to be a sharper investor. Podcasts, I mean, there are a lot out there. I would definitely recommend your podcast as a
Thank
start,
you.
but I still like Invest Like the Best. I think it's a great compilation of interviews with literally some of the most iconic, influential thought leaders in our industry, and I really like the style of investing, a style of interviewing by Patrick, and I still am a diligent listener for that podcast.
Brilliant. Now, Fooled by Randomness was his first book. Do you think Black Swan was better or the original's the best?
Oh, Black Swan. Look, I think Black Swan was a great book, obviously, but I think Fooled by Randomness it's better for kind of just it's a lighter read in my opinion, and it's just more applicable on day-to-day ongoing observations around the world rather than focusing on like one black swan event that could, change everything dramatically for the worse. I'm an optimist at heart, and I would hope that we don't have that many black swans in our lives. Yeah, both are great books.
Excellent. And if people want to follow you and learn more about your journey, where can they reach out or contact you?
Oh yeah, please add me on LinkedIn. And if anyone's ever in New York, let's grab a coffee and just chat.
Well, Shu, thank you very much for joining the pod. Really appreciate the discussion.
Thank, thank you so much for having me. This has been super fun.